Hey, what's up, everybody? It's Ronco Johnson, your lifestyle focus advisor here. Good afternoon. Good afternoon. It is Friday, Lifestyle Focus Friday. Hey, listen, did you know that life insurance can be a part of your charitable giving plan and your estate plan? We're going to talk about it today. We're going to talk about some things that I think you would want to add to your list of charitable efforts. And I'm going to show you a couple of details of how you can do this very simply. See, for those of you who have planned to maximize your financial returns, over your lifetime and beyond, for those who need you now, and for those who will need you in the future, including charitable giving in your estate plan can help fulfill all your hopes and dreams and desires. And we're going to talk about how you can use it in your planning right here on Lifestyle Focus Wealth. So sit back, relax, and unwind and hang out with us for a while. And we're going to talk about it, but on the inside. See you inside. Hey, everybody, it's Ronco Johnson, your lifestyle focus advisor here. What's happening? It is Lifestyle Focus Friday. And you guys know I can't wait to see you on Fridays. Man, thank you for tuning in. Thank you for hanging out with us. And thank you for just coming back. Welcome back. This is when the lights go out. Are you ready? So before we get started, we just want to get some house cleaning things and some housekeeping things for those of you that are new to our program. And for those of you who have returned, well, welcome back. Thank you for joining us. Today, we got a topic that I really think is going to blow your mind. We're going to talk about how to use our very secret financial tool in the form of charitable planned giving and in your estate plan, and give you some ideas of how you may be able to use these as opportunities. And, that's just one of those things that give you the big heart, right? The big heart, I can't do it right. The big heart, you want the big heart. And it gives a feel-good moment to everyone involved. And if you're able to provide a solution in such a way, it just touches me in a great way. So before I get started, if you're here and you're just now getting started and you hear something that you are motivated by, that intrigues you, I'm going to ask you in the comments, do us a favor. Type the words takeaways and then your comment. This helps us to find out or to find you more quickly. And maybe we can address your comment online in our live broadcast. But if you're watching us in the replay, all we want to do is be able to reply to you. Let us know what you're taking away. It means a lot to us. And, it lets us know that we're giving you good content that you can use and it works for you. Is that making sense? Okay. So, I'm going to just say this right now. If you're not part of our Lifestyle Focus Wealth community, it's easy to join. You need to go online today and join us. It's only $16 a month if you pay the annual subscription to our community. And this is our community of individuals already taking advantage of what millionaires and billionaires do. And we have some private coaching coming up. We have a 5-day challenge coming up. Man, there's just so much that I want to talk to you about. But today, we're going to get right into it. And, if you ever think that you want some coaching on some of the topics that we are talking about, simple. Just go online to our lifestylefocuswealth.com and click the button. Do a one-on-one and give us a reason to sit down and talk to you. Okay? Give us a reason to talk to you. I see you folks coming into the comments. Hey, Sam. Hey, Donna. I see you guys. Good afternoon. Good afternoon. Man, y'all are definitely in the house today. Thank you for joining us again today. Man, we got a lot to get into. We got a lot to get into. So tell me something. How many of you have thought about giving to your favorite charity, foundation, sorority, fraternity, or whatever the case may be? If you've ever thought about how you could give back in an effective way, this episode is for you. Okay? This is absolutely an episode just for you. We're going to talk about how we use charitable plan giving strategies or charitable giving strategies in your financial plan, right? That's what we're going to be talking about today. And that might be over the head of some of you, but, just some statistics here, okay? American individuals who leave bequests, their foundations, and corporations, they're estimated to give $471 billion to U.S. Charities in 2020. Now, that's a lot of money. So giving by individuals totaled an estimated $324 billion, while giving in bequests, I mean, it's mind-blowing. When you look at overall $41 billion of charitable dollars being given, it affects the economy. It affects the economy. And being charitable giving is crucial to the social and economic welfare of our country. And, you could go back to the Carnegies, the Rockefellers, the Gates family. These are many recognizable people who are charitable donors that have given in a huge way most of their wealth in the United States using these charities. So one of the big things that I just want to touch base on is there are many reasons why people, give to a charity or why they volunteer. And the truth is the desire is to improve society. That's generally what gifts are all about. And with gifts to cultural and educational organizations, it gives us the opportunity to grow. It gives us the opportunity to grow. And we can help the less fortunate. I like being in that scale because if you've ever lived without before, you know how important these charities are to people. And I think this program is a way of giving back. I think this is a charitable program for some of you who want to get your wealth upgraded and get to another level and becoming a part of our lifestyle focused community and coming to our classes and our workshops. And listen, I know the difference when you're looking from the bottom up. It feels like you can never get there. But once you start investing your time into leadership, investing the time into self-development, investing the time into business practices, and start eliminating as many of the mistakes that you possibly can, and then you start leveraging your dollars in such a way that you never interrupt the compounding interest, now you're starting to see levels of success probably beyond the family before you, right? Well, once you get to that point, it's important that you think about giving back, because at that point, it's important to reach back, grab someone, pull forward. It's just the way things are. If you point one finger at you, you always got three pointing back. That's just the way that I've always lived. And I hope this program is doing something for you and benefiting you. So if you understand the concept of what charitable giving is all about, give me a thumbs up or put in the comments right there that, hey, that you understand. So before I get all into it, do us a favor. You got to do a few things. Don't forget to like us. Don't forget to share. We need you to tell someone. Our statistics are showing us that 80% of the people watching are not subscribed. And thank you for you 20 percenters. It's always the 10 to 20 percenters. Thank you guys for subscribing. We have just reached our 30,000 views, and we're really excited about it, but we need your help to grow. We need to get this financial intelligence and financial information out there and educate people as fast as we possibly can. So don't keep it to yourself. Don't forget on the bottom of the button, hit the notification button so that you can get all of our content as it comes up. Okay? And that's my speech on that for today. It's you that's helping our channel grow. It's just simple as that. You're helping our channel grow. And as you're helping our channel grow, we're helping to inform the world. That's correct. We're helping to inform the world. And we don't want to be there by ourselves, right? Not at all. So just in a moment, when I return, we're going to start talking about these ideas and how it affects you. We'll be right back. Hey, join our Lifestyle Focused Wealth community. Membership's starting at $16 a month when you pay the annual subscription. So register online today at www.lifestylefocusedwealth.com. All right, so we're back. We're back, and we're talking about charitable giving and how it affects our lifestyle and how you can take part in it and be a helpful person that's helping other people grow. I'm going to tell you something. When you speak good into the world and into the universe, it just feels good. It just feels good. And I'm going to tell you, there's nothing like just feeling good. When you feel good, you do better things. People want to be around people who are always feeling good. Look good, feel good, do good. That's just how I feel about it, So I shouldn't have to tell you because we already know our lifestyle focused wealth people are all about looking good, feeling good, and putting positive energy into the universe, right? That's exactly what we're going to be talking about. I see some more folks popping in. Hello, Leela. I see you coming in. Thank you guys for hanging in there and joining us. So let's get started here. We're gonna just get into it, and we're gonna talk about a couple things. And we talked about earlier why charitable giving is important and why people give to these cultural events and educational organizations, because they're focused on giving back to the less fortunate. And you can give gifts to religious organizations, to welfare organizations. There are so many ways just to give back. And even if you desire to reduce your taxes, this is a good way to do so. There's always a financial strategy to what we're talking about. So our federal government encourages charitable giving by offering tax deductions for charitable gifts. Did you know that? And if you're not taking advantage of it, you need to sit down with your financial professional, your accountant, maybe even your lawyer, if you have a trust out there, and talk about, hey, what is this that I'm hearing about charitable deductions? And if I can take part in it, how can I do it? And how does it affect me? It's more likely to influence the form of gift giving rather than the amount of the gift. So, I much rather, a lot of times we look and focus on just how much cash is being given. But sometimes we don't have the cash to match up with our heart. And sometimes we need some other ideas on how we can go beyond what our cash flow allows us to do. And using life insurance inside a charitable plan or a gift plan or what have you, you'll find that a lot of times, especially at some of the universities and mega churches and those types of things where donors will purchase life insurance and have someone like us to come in and talk to them about how we can make your gift go further, how to make that gift, that monetary gift, go further. So this is why people tend to give to charities. Some of the reasons: they're generous. They have a religious belief. Maybe they have just a high level of gratitude or hope for the better future. There's so many reasons that people are out there. It's interesting. But if the main reasons were to include supporting a specific cause or wanting to honor a loved one or repay back a cause such as a thank you, that's why people give back to universities, because they're happy about the degrees or the type of business that they went in. You can create a legacy within a community. You can create a legacy within a community. You can start just giving back the Ronco Johnson Award. We have the Gift of Life program, and we have different awards for different situations. So you can start small and then become part of a bigger organization. You also can benefit an organization to utilize that's utilized by family members, or you could dispose of assets when there's no heirs. Maybe you don't have any children. Maybe there's nobody left to leave money to. I will encourage you to consider having a conversation with us about giving to a favorite charity or some that kind of meet where you are right now, right? Where you are. So some of the strategies that I've come across, whether you're a modest person or the wealthiest in the segment of the population, charitable giving can be significant in many ways in your financial and estate plan. Each year, that total amount of money that you give away or that amount that you designate for charitable use or contributions made by individuals or corporations, you could do either one. You could be the individual, you could be the corporation. It demonstrates that Americans feel support of charities that are essential to our lives, like the Red Cross. There's so many out there that are essential. So there are many different strategies that we can use. It's too many to go into all on this podcast, but I just wanted to make you aware that, you might want to get involved. Some involve the use of trust. And I know we've talked about trust on this particular podcast many of times, the once method: own nothing, control everything. Own nothing, control everything. Hey, listen, that's what we're all about. But also, the trust allows us to give in ways that keeps us anonymous and keeps it private. Not everybody needs to know every good deed that I perform, right? Some people feel that way. So these strategies that we're going to discuss, there are a couple of ways of doing it. So today I don't have a running log, so you just kind of have to write it down and kind of follow me on it, okay? You just got to write it down and kind of follow me if we go too fast. All right. So first, we're going to talk about our non-trust strategies. I mean, these are outright gifts: cash, ordinary income, property, CDs, money markets, maybe even if you have long term capital gains on property, stocks and bonds, and life insurance. These are all outright gifts where you can designate your favorite organization to be the benefactor or the beneficiary of the proceeds that you have in mind. Bequest gifts. These are gifts that typically you'll find in the bequest gifts: a will, again, life insurance policies, or real estate. So when people are donating the bequest, you'll see that all the time, especially when you go to universities or hospitals and these types of deals where they've donated land for research and development. So some sophisticated strategies that are out there are charitable lead trust, charitable remainder trust, and private foundations. A wealth replacement trust may be used to replace the value of the assets donated to a charity. And that's for family members or other beneficiaries. So these are just some of the terminologies that you will hear out there. And this is what the wealthy do, folks. This is what the wealthy do. We want to remember what I said earlier, we want to be able to gather our dollars, tools, gather them. We don't want to spend them. Too many times we're spending our tools before they need to be spent. But if we gather these tools and position it through our secret financial tool called life insurance, the cash value life insurance that we're talking about, it allows us to remember, I'm just repeating this, remember you can put the money through your policy and have the advantage, the tax advantages of being able to access your money without interrupting the compounded interest, income tax free, because you're taking it as a loan. Well, with that in mind, when we add the idea of charitable gifts, income tax deductions are important because the charitable gift is a transfer of cash or property or investment property for the use of a qualified charitable organization. And typically, you're looking to make sure that, hey, these are organizations that can accept your gifts, typically 501c3s and such. So the Internal Revenue Code, the 170, it's the section 170 that allows for income tax deductions for charitable gifts to be made every single year. You can make these gifts every single year in your taxable year. So the gifts must be a gift of a donor's entire interest in a property. So you can't give 50% of your house. It's the whole house. Whatever you're going to be giving away, it needs to be the whole thing, unless it's some type of a gift that has a statutory exception, and it allows for partial gifts. But in the most part, you're trying to give the full gift. Okay. Some of the eligibilities that there are eligibility requirements for when you're donating these types of gifts. So for an individual's income tax deduction for charitable gifts to be subject to certain limitations, here are a few factors. There's several of them. Okay. The type of property that is contributed. For example, long-term capital gains on property, ordinary income property, cash, whether it's an outright gift or a partial gift. These things are important. The taxpayer's adjusted gross income, important. And whether they can itemize these deductions. You might want to sit down with your accountant or your CPA, lawyer, or financial expert and figure out, are your needs going to be met? And are these different types of deductions eligible? Or the things you want to give, are they eligible for deduction. So different other types of organizations. Is it a private charity or is it a private family foundation? These things you want to know, whether it's gifts to or for the use of a charity. And a lot of times for the use of a charity means I'm going to give something and they're going to be able to use it. Maybe I give a computer and that charity is going to be able to use it, right? Or maybe I'm going to give some cash and they're going to be able to use it for research. So depending on how the property is donated, the amount of income tax deduction may be limited there. So you just want to make sure you kind of know where you're going in your planning, right? Does that make sense? If we're talking about planning, we don't want to just go out there and jump off and do things that we're not supposed to, because that might not be the best thing for us at that time, right? Are you with me? Good, good, good. So let's talk about gifts. Gifts of cash to a public charity. Generally, the deduction is up to 60% of your AGI. So 30% of the gifts to private foundations. So they're not 100%. You do need to know that there's percentages to the gifts that you give. It's important for you to know that. That way you can figure out how much money I need to be able to reduce my taxes. I need to know what percentage and if I'm getting the maximum out of my strategy. Gifts for long-term capital gains to a public charity, deductibility is up to 30% of your AGI. And if it's going to a private family foundation, it's 20%. So the general rule with respect to donations for long-term capital property is that no gain or loss is recognized by a donor upon the contribution of the appreciated property. Okay, as long as it's directly from a qualified or to as long as your gift is given to a qualified charity. So this rule does not apply for other types of property, such as deferred annuities, debt encumbered properties. That does not apply. So we want to make sure that, again, you know exactly what percentage of my gift is going. And there's a difference between having my short-term stuff and my long-term capital gain stuff. So we want to be able to sit down and have that conversation, right? So we're talking about gifts of a partial interest. Now we're talking about gifts of a partial interest. You should know that they're generally not tax deductible. However, there are several statutory exceptions for specific types of partial interest gifts. And these exceptions include charitable lead trust, remainder trust, an undivided portion of a donor's entire interest, an irrevocable remainder trust in a personal residential or in a personal resident form or a farm. If they own a part of a farm, maybe you and a brother have a percentage. Maybe they have 50%, you have 50%. You can donate your 50%. So when donating these special types of partial interest gifts, the income tax deduction is not equal to the fair market. It's not. Okay? Instead, these gifts are only partially deductible. That's why they call them partial interest gifts. The partial deduction is based on an actuarial value of the interest actually received, okay, or to be received by the charity. And that's how they kind of read that out there to you. So hopefully I haven't lost you out there. So if you have any comments, please make sure that you're putting in there in your comments. If you have questions, take a moment, type in the comments, takeaways. Put your question in there. And I see some of you guys live. If you could go ahead and put your questions in, we'll be happy to answer them for you. And as I'm looking around on all my screens, I see people writing. I see people in deep thought. That's a good thing. That's always a good thing. And I'm just looking to see how many of you guys have given money, such as Christmas gifts, even going to church last week. How many of you guys gave to your organization? How many of you guys continue to give to your church? Make sure you keep your receipts. All that matters, right? All that matters. Okay, so let's talk about types of charitable organizations. Qualified charities defined. All right. So contributions to the following charitable organizations that we're talking about are eligible for an income tax or an income tax charitable deduction. So you want to make sure that they're licensed the right way, they have everything they need to have. So to the extent of a partial gift, we've talked about it as partially deductible. You may want to look and see what type of charitable organization I want to give to. So a community chest, corporation, a trust, a fund, a foundation organized by the United States law that is operated and organized solely for religious, charitable, education, scientific, or literal purposes, So the prevention of animal cruelty or cruelty to children, these are some of those organizations that you may want to consider. If you're a war veteran or your family has veterans in it, maybe you want to give back to an organization that supports that. Maybe you're part of a fraternal organization or a domestic fraternal society, only if your donation is used for the purpose described above. So we have to make sure that the dollars or the gifts that you're trying to give are going to be used for that purpose. And these organizations are held to that standard. So you got to make sure that you give it to the right people. Certain nonprofit cemetery companies, the United States or any other state out there that has political subdivisions, Indian tribe governments, if your gifts are exclusive to a certain group, you want to make sure that these things are qualified. Make sure their licenses are up to date. In general, qualified charities include most churches, temples, mosque, what else? Religious organizations, nonprofit hospitals, nonprofit educational organizations, colleges, museums, parks, recreations, all these things. There's so many different types that you can get involved with. So if you want to check out and see if there is a approved list, you can go to the IRS website, and that's www.irs.gov/charities and nonprofits, and look that up. And there's a list there that you can look, make sure that you got the right types of organizations that you want to give to, and that will make you feel good about it. So, if you're out there changing the world and you feel better and better about how you're doing it, here are some non-trust strategies for you. Maybe it gets real simple. Maybe it's just giving out cash. Gifts of cash is like the easiest way to give to a charity. The full value of cash is deductible in the year that you gave the contribution. So, generally speaking, If a donor may take a current deductions of up to 60% of their adjusted gross income in the year that they gave a cash gift. So if you forgot to deduct a gift that you gave 2 and 3 years ago, it's not valid. It's not valid. We're only talking about the gifts in its current year. Okay? Only gifts in this current year. So let's talk about ordinary income property. Gifts of ordinary income property include gifts that include property where sold. Okay? This is typically property that would produce ordinary income to the donor. Example, include works of art, if the donor is an artist, capital assets that are held in that year or less than that year in the inventory. Those things can be deducted, okay? So gifts or ordinary income property are generally deductible up to the amount of the donor's cost basis. So in other words, if it cost me $300 to design it, then it's up to that $300. But the fair market value of an ordinary income producing property must be reduced by the amount of ordinary gains. Okay? So there's going to be some left over, but it's not the full amount. It's just up to generally what the donor's cost basis was. All right? If I didn't say that in a way that everybody can understand, please let me know. And I'm looking at you guys in the chat. Good deal. I haven't lost anyone yet. Good deal. Good deal. So the next one is long-term property gains. Long-term property gains, if sold, will result in long-term property gains for the donor. Capital assets that are held more than 1 year are long-term capital gain assets. Give some examples. Maybe you're talking about stocks, bonds, mutual funds, cars, real estate, collectibles, even coins, okay? So normally, no gain or loss is recognized by the donor when it is a long-term capital gains property. So when items of a long-term capital gains property are donated to a qualified charity, there are no gains and there are no losses. This is one of the major tax advantages of a charitable gift of appreciated property. The accumulated capital gains escape tax entirely. I'm saying it very slowly because when the gift is made directly or outright to a charity, it escapes the tax. So this is one way that you can give to your favorite organization of an appreciated asset, okay? Contributions of capital gain assets are generally deductible if the item's fair market value at the time of contributions is made. However, the deductions will be limited to the donor's cost basis in some cases, okay? Depending on the status of the charitable recipient or the percentage of the limitations that they choose, okay? So these percentages that you need to know about, they're important. You can't just go out here thinking that I could give away something and I get 100% write-off on everything I donate or give to a charity. That is absolutely not true. However, you want to be able to give the things that have the higher percentages away, okay? Some of the qualified charitable distributions from IRAs permits taxpayers age 70 and a half and older to make a direct distribution of funds from their IRAs to a charity while avoiding any income tax liability on the distribution. That's because they don't own it anymore. They gave it away. This benefit is only available when you're using qualifying distribution forms such as traditional Roth IRAs or inherited IRAs. This is not available for distribution from qualified plans, not 401ks or 403bs, or from ongoing SEPs or simples. Those are not qualified. Okay. So the maximum amount that you can use under this approach is about $100,000 a year. So you want to check with that index inflation beginning in 2024. You want to just check that out and make sure that these numbers that I continue to give you, depending on when you're watching this recording, are still valid. Okay. So, and if you're beginning at age 73, your qualified contributions or your qualified charitable distribution, it also can be satisfying to your required minimum distribution, or what is called your RMD. Most people that are waiting until they're 72 and a half, there's that tax that you have to pay that maybe you just don't want to have to pay it, taking income that you don't necessarily want to do. Well, a good strategy for that is to give it away. Maybe you find it at a time where you want to give it to your favorite organization out there. In order for your qualified charitable distribution to be completely counted on your RMD, you must first be the first distribution taken from your RMD, or it must be the first distribution taken from the IRA in that year. So you can't take out money and then give it. You want to make sure it's the very first distribution from that IRA in that given year. So if you're making any deductible IRA contributions after turning 70 and a half, now 72 and a half, and you're using this qualified charitable distribution method, you might just want to check that out. Okay. For example, if you were 71 and you made a qualified charitable distribution in 2022, say, for instance, you gave away $10,000. And also where you made, you were to, say you made $7,000 of deductible IRA contributions. The tax-free portion of your qualified charitable distribution reported on your tax report will be $3,000. That's the remaining $7,000 of the qualified charitable deduction that you took. So out of the $10,000, $7,000 was a deductible IRA. That's going to leave you $3,000 on your tax return. Okay. Another idea out there, we're going to talk about our favorite financial tool. Life insurance is a sensible way and a very cost-effective way to give a lasting gift to a charity. By working with a charity, you can purchase a policy that names the charity as the owner and the beneficiary. And you are essentially just making the payment. And you're making the payment makes that tax deductible because you have no interest in the policy, right? You've made them the owner and the beneficiary. So assuming that the policy has not matured, this organization receives the full benefit of a policy when you die. And if it is a policy with cash value, the charitable organization may have access to these uninterrupted cash values in the policy while you're living. Okay? So, in other words, if you come from a place or have a church with a building fund that always is using its capital, well, the same as it works for you as a person, it may be time to sit down and have a conversation with your board and ask the question, if all the dollars coming through this charitable organization are being used immediately, how much money are we passing up on in the long term? Because life insurance, as we talked about it before, if it is properly structured and it has all the right mechanisms in it, the dollars that flow through it continue to compound on a tax deferred basis. And it has access to that capital in the form of loans for that organization. They don't have to wait until you die. They can use it while you're living. And this is just another way that life insurance can be a valuable or super valuable tool in your financial plan. Okay? So you can even, for those of you that have policies, you can even have a gift of an existing policy. The donor may deduct the value of an existing life insurance policy as of the date of transfer. So as of the date that I transfer the ownership to the charity, I can deduct the value. So the value of an income tax deduction, or the value for income tax deduction purposes, is the cost basis or the premium that's paid into the policy, or the fair market value if it is lower than the cost basis. Okay? So you need to know that no deduction is ever allowed if the policy is subject to a debt. So no matter how small that debt, at the time the policy is transferred to the charity, it needs to be without debt. Okay? So once the charity owns this policy and is the beneficiary of this life insurance policy, the donor may then deduct all future premiums paid to the charity. And like I said, it's because you do not have ownership of the policy any longer. You've given the ownership to the charity, and the charity is the beneficiary. So the premium payments should be recognized as a cash gift contributed directly to the charity. How do y'all like that one? How do you like that one? I know we talk about this in our one-on-one sessions. We talk about this with our business leaders. We talk about this with our nonprofit organizations. This is why you need to be part of our lifestyle-focused wealth community. Everything you need is in the room. We do much more than talk about, term insurance. We do a lot more with this financial tool that helps build the profile of organizations that matter. And your part of your legacy is you're part of the solution. You're part of the solution that's helping to resolve all the need in the world. I don't know about you, but that just makes me feel good. That makes me feel good. So all the type of planning that we've talked about in the past, whether it be cash values or the death benefit, guess what? It goes right to the organization that you're looking for. All right? And we're going to talk about bequest gifts for a moment. A gift is made after the donor's death is called a bequest, or sometimes they call them testamentary gifts. Testamentary gifts that are made to a qualified charitable organization are eligible for an unlimited estate tax charitable deduction. So there is no limit on the amount of property that can be transferred as a gift at one's death. So the amount of charitable estate tax deduction is not dependent on the status of the recipient or the charitable recipient whatsoever. So that's something that you need to just keep in mind. So the donor could contribute his entire estate to a charitable organization. Just completely make them the complete owner of it. And the estate will completely escape federal estate taxation. Okay? We got to understand a couple things. We're talking about insurance, right? And we're talking about taxes, right? Well, what exactly is a will? A will is a contract. So now we're talking law, right? Contracts, insurance, property, and taxes. These are all the things that we need to be speaking about in the estate plan. If you're only talking about wills and trusts, if you're only talking about real estate, if you're only talking about life insurance, and you're not putting this whole entire picture together, you're making a big mistake. This is what we call planning. And that's the difference that sets us apart. We're having a comprehensive conversation about what your plans are. These things are, however, the most important details. So don't go running away, clicking on TikTok or looking at YouTube reels that are only 15 seconds long. It's too difficult for us to explain it all in one 15-second setting. But I will tell you this, it is important if you can just have a moment of your time. It may be saving you more money than it costs if you were to do one thing. Schedule some time to sit down with someone that can help you. Because you're probably paying more money in taxes than the cost of our coaching program. And if your coaching program were going to cost you $10,000, but it was going to save you $100,000, $200,000, would you pay it? If it was going to cost you $100,000 for the information to save you $1 million, would you pay it? I got to drive this point home to you because coaching is key. You're paying for the opportunity to shorten the time gap, shorten the time of making mistakes, and getting the right people in your plans to make the right recommendations for you to make an informed decision. It's so vital. Okay? I'm just going to continue to say this. Schedule some time with your professional. Visit us at Lifestyle Focused Wealth and let us continue to provide the financial education that may elevate you. Okay? That's all we're wanting to do. And then bring a friend, bring a family member, bring a coworker. We work with all of you. Okay? So back to what I was saying, a will. If a charitable gift is made through a will, the donor maintains ownership of the asset during his lifetime, or while the asset, with the asset passing after his passing. Okay, after he's gone, then the asset passes on afterward. So these types of gifts are very popular, as the donor retains the lifetime use and control of the asset. Gifts through a will or testamentary trust can be used in one of these several ways. You can use a flat dollar amount that's directed to the particular charity. A percentage can be used in the bequest. Either you can use a percentage or a fractional share of the estate that is transferred to a charitable organization. You have a very specific or general bequest that can be made when it comes to a specific asset or a partial asset. You have contingent plans. If the charity or if the gift to the organization is dependent upon the performance of an act or happening of an event, no charitable deduction is allowed unless the possibility of the charity is not might not receive the property. So you want to make sure that this is not just some remote chance that it would receive it, because this would make it ineligible. It wouldn't be eligible. It needs to be an asset that can be recognized and part of the plan. Let's talk about this beneficiary for a second of life insurance. If the charitable organization is named the beneficiary of a life insurance policy, at the person's passing, the proceeds are paid to the charity at that person's passing. And your estate receives the charitable estate tax deduction, okay, at that time. It receives the charitable estate tax deduction at that time. All right? So we've gone over our time today, but if you would like a little bit more information on how these tools can be helpful to you, maybe I have to come back and do a part 2 and give you a little bit more information, because these are tools that can really help. And we want to be a part of that, right? So if you got more information, we have more information on how to put your charitable leads trust together and how your lead trust work. Maybe we'll just carve out a segment in the future, and maybe you just go down to our description and maybe I'll put that down there. So if you want to hear more about it, please go to lifestylefocuswealth.com and schedule some one-on-one time with us to see if we can help you with the opportunities to help you give back more than you take in. So listen, that's my time today. This has been When the Lights Go Out, Are You Ready? I just want to quickly say thank you guys for hanging out there with me. I know I didn't get to answer so many questions today, but I want you to be out there thinking about ways to help the community. You know, all we need to do is think about how we can give as much love back as possible. And that's our feel-good moment. And if you're not thinking that way, you're having a lights out moment. Hey, that's my time. This has been When the Lights Go Out, Are You Ready? I'm Ronco Johnson, keeping you company, and I look forward to seeing you next time at the top. I'll see you later next Friday, 1 o'clock, right here. I'll see you soon. Have a great weekend.